This is highly indicative of a return to a growth cycle for the entire semiconductor industry. So, what's all this optimism about exactly?
I think this is where our views start to diverge a little bit. Hey everyone, welcome back to Chipstock Investor. Let's talk about Micron. Micron hit it out of the park with earnings again in the Q3 2024 earnings release. You can see $6.8 billion in revenue. Revenue was up 17% quarter over quarter and up 82% year over year.
We'll delve a bit more into the financials here shortly, but quick recap from the semiconductor industry flowchart. Micron is an IDM, integrated device manufacturer. They both design and manufacture memory chips. Of course, all the rage right now is high bandwidth memory, HBM, specifically the third generation. So you'll see that signified by HBM3E in all sorts of media reports and marketing materials. HBM3E is really just a stack of DRAM chips. And the three companies leading the charge with those types of chips are, of course, Micron, and then over in South Korea, SK Hynix and Samsung.
We can focus on three parts of the computing system. There's the computing, that's the chips that do the number crunching, the logic of the computing system. You can think of that as NVIDIA's GPUs. Networking is the second part of the computing system that manages and moves the information between different parts of the networks, like between logic chips from data storage to logic or into and out of the data center. Companies like Broadcom, Marvell Technology Group provide those semiconductors that manage the networking portion of it. And then finally, we have storage. That's where information is stored, either in queue, waiting for compute processing, or long-term storage to be used later on command. And that is where we're focusing on today with Micron. They are a memory provider.
The reason why this has become such a big deal in this era of AI, accelerated compute infrastructure, we see a lot of companies like NVIDIA's Blackwell platform, as well as other chip systems like AMD's MI300X accelerator. And you can see in those pictures of what those chips look like, at least a few stacks of those DRAM chips, those HBM3E DRAM memory cubes sitting alongside the logic and computing chip. So lots of more memory needed in the AI era. But this, of course, begs the question. The market knows all about this. Investors know all about this. And the stock price has skyrocketed, not just to all-time highs, but in excess of nearly 50% of all-time highs at certain points here in the last month.
We created this chart with the help from our friends at finchat.io. Finchat.io has a lot of different metrics that you can use and build charts and analysis for businesses like this one, powered by nothing other than AI. Make sure you check out the link below. You can get 15% off a membership. Okay, Nick, tell us more about this disconnect between the stock price and the reality for a memory company like Micron.
So as an IDM, Micron is a manufacturer of commoditized parts, albeit very advanced parts and pieces. The reason why it's a commodity, again, remember Micron competes with SK Hynix and Samsung that also provide HBM3E memory to these AI systems. And so a commodity is whenever you can swap out a similar or same product from one company for another. Because of that dynamic, memory chips tend to be one of the most cyclical parts of what is already a very cyclical semiconductor manufacturing industry. You can see that here in the revenue and the GAAP net income. Revenue pictured there in yellow, GAAP net income in pink. And we're still sitting pretty close to the last cycle bottom at the tail end of calendar year 2023. Micron returning to growth mode. Again, like Kasey mentioned at the outset, Q3 fiscal year 2024 revenue was up 82% year over year, but we're still a long ways off from peak revenue and even further off of peak GAAP net income that was actually set all the way back in fiscal year 2018. So What's all this optimism about exactly?
I will say that I found Micron's outlook to be very aggressively positive. And most of that is because of AI. In this slide, when they're talking about the overview of this last quarter, they said that they have confidence that they can deliver a substantial revenue record in fiscal year 2025 with significantly improved profitability.
Yeah, this is an important point. Fiscal year 25 actually ends just more than a year from now in August 2025. So we're not even quite finished with fiscal year 2024 yet. And Micron is already calling for a new record in annual revenue, fiscal year revenue, and significantly improved profitability, which I'll mention has been one of the goals of CEO Sanjay Mehrotra since he took over a number of years ago. Kasey, aggressively positive is a good way of explaining this. Just to go back to the previous chart, again, we're still a really long ways off, let's say 40% off of peak revenue. And the company hasn't even returned to GAAP net profitability again yet. Not yet. So, what is it exactly about AI that has investors so excited? I would say maybe first and foremost, it's not just the AI outlook that has the market optimistic. Remember, again, this is the most cyclical of cyclical chip manufacturers. And we're going to show you our chart here in a moment about the different end market demands for semiconductors that we've been showing you in nearly every video now for the last couple of months. Most of the semiconductor market, excluding AI, is finally coming out of the bear market of 2022 and 2023. That is very positive. NVIDIA helped carry much of this market all on its own, all on its back with the accelerated compute systems. But you can see Micron reporting across the board strength once more for its end markets, from PCs, smartphones, to embedded industrial segments, which is an area of weakness. Automotive, we'll talk about that here momentarily. Enterprise storage, things are looking pretty good again. This is highly indicative of a return to a growth cycle for the entire semiconductor industry.
So let's focus on that first portion, the data center. Data center industry server unit shipments are expected to grow in the mid to high single digits in calendar year 2024, driven by those AI servers and a return to modest growth for traditional servers, like hyperscale servers. As far as the HBM, the high bandwidth memory, Micron says they expect to generate several $100 million of revenue from that segment in fiscal year 2024 and multiple billions in revenue from HBM in fiscal year 2025. As far as data center solid state drives, they expect the start of the recovery of traditional compute and storage infrastructure to begin.
In one of our recent videos, we did a mid-year update on our top chip stocks of 2024. Kasey, back at the beginning of the year, you had picked Pure Storage as one of your top picks. Maybe this rising demand for SSDs is the reason why Pure Storage stock has taken off the first half of the year.
Certainly has something to do with it.
Okay, check that video out. Link below. You can get Kasey's thoughts on Pure Storage and why there might also be a disconnect between that stock price and the current financial reality. At any rate, let's move on to the other end markets here. PC, of course, we've talked a lot about this already in past videos, and smartphones. Consumer electronics have finally reached a bottom. It looks like we reached that cycle bottom the back end of 2023, and we're now in the beginning stages of a modest return to growth. It looks like low single-digit unit sales for PCs this year and low to mid single-digit smartphone unit sales for calendar year 2024. As far as consumer products go, automotive, again, a standout for Micron. They don't have to deal with the logic chip portion, which is a little bit messy. NVIDIA and Qualcomm outperforming in logic chips for automotive versus a lot of their competitors like Intel's Mobileye, for example. But on the memory side, it doesn't matter if it's an electric vehicle, if it has some sort of advanced driver assist system, or if it's just some old plain vanilla internal combustion engine. a car with a big new shiny infotainment system in it, lots of new memory chips needed for those things. So Micron doing well in the automotive market. So about that chart on where we're at in the cycle for different parts of the semiconductor industry supply chain.
We have listed out the market segments for the semiconductor industry: AI infrastructure, consumer, which is the PC, smartphone, mobile devices, cloud and enterprise, and auto and industrial. As Nick said, we've seen a significant cycle downturn in the last 2 years, but we're currently at either the start of a new growth cycle or, as for AI infrastructure, in all out growth mode. And we do expect that auto and industrial segment to start picking up from here on out.
I want to reference this chart one more time. And let's talk about whether or not there's a big disconnect between revenue and net income and the stock price achieving record new highs this year. I think this is the big question at this point. And I think we've come to a bit of differing views on this one, Kasey, but let's break it down and more specifically, not look at what happened, but what will happen, because that's the more important thing we have to look at when we're trying to figure out what is a reasonable price to pay for a business. I'm referencing this one more time and saying, okay, you've seen this past performance. Let's now look forward. And here's the guidance that Micron provided for fiscal 2024 Q4, which is the quarter that will end in just a couple more months in August of this year. A significant quarter over quarter increase to 7.6 billion in revenue at the midpoint, and see diluted earnings per share there on a GAAP basis. Micron actually going to return to GAAP net profitability this quarter. That's good news.
We're going to talk about valuation here for a moment. And what we're going to do is we're going to take those numbers from the previous slide, that outlook for the next quarter, and add it to the first 9 months of fiscal year 2024. You can see the revenue for those 9 months ending in May 30th was around 17.4 billion. Net income was at a loss at 109 million, and earnings per share were negative 10 cents. Nick, why don't you walk us through our reverse DCF to see what the market is expecting for the current stock price?
Yeah, we're going to use the modeling section from finchat.io for this. This is a very useful tool, especially for a business like Micron, if we expect there's going to be a cycle top and then the start of a new cycle bottom within the next 3 to 5 years. So pretty simple, starting with the first section that's underlined in red for fiscal year 2024, Micron gave us that number already. Adding the Q4 outlook plus the first 9 months of fiscal year 2024, the outlook is about $25 billion. I'm going to give them the benefit of the doubt and say we're going to get that plus 200 million in Q4 and generate 25.2 billion for the year, a 62% year over year increase. That looks absurd, but again, remember, this is a cyclical business. It is not unusual to get these really wild year over year changes in growth as we exit the cycle bottom and return to max growth for the upcycle. So that's why I have 50% revenue growth for fiscal year 2025. Micron said, remember to expect significant record revenue in fiscal year 2025. I don't know what significant record revenue means. I'm going to say, let's say 4 to 5 billion over the previous record from fiscal year 2022. So I put 50% growth in. And with that, a return to all-time net income profit margin peaks of 35%. At this point, what we're really trying to figure out, Kasey, is what gets us to fair value today. Fair value of $130 to $140 per share. That's where the stock is currently trading after the earnings update. So I did some guesswork inputting the rest of these numbers into the chart to try to deduce what needs to happen between now and fiscal year 2028 to get us to fair value. So I put 20% growth in fiscal year 2026, 5% growth in 27, and negative 20% growth in fiscal year 2028. I'll explain why I did that momentarily, but then to round out the reverse DCF, I've got a discount rate of 10% plugged in there at the top, 4.25 for a risk-free rate of return on treasury notes, and then a 5.75% market risk premium to get us to 10, and then a terminal growth rate of 7.5% beyond fiscal year 2028. That's what gets us to roughly $130 to $140 per share as a fair value. You can see there in red at the bottom. Okay, so how do we use a reverse DCF? That's what gets us to fair value. Those are the assumptions that we have to make to get us to what is a fair value to pay for Micron stock today. The question for you as investors now is, do you think that's reasonable? Let me go back to the previous slide. Kasey, you start something roughly in this ballpark. Is it reasonable?
I think this is where our views start to diverge a little bit. The valuation is very high, and these are high bars to clear. And the stock is most definitely not a good value at this point. But in a cyclical upcycle for the memory market, it certainly seems like Micron could potentially reach these numbers. And as a result, the stock price could definitely continue to rise higher despite the outrageous valuation.
Yeah, and I think that's a fair point, Kasey, because a lot of investors probably not looking at what's a reasonable price to pay today, but instead just looking for a stock that is going to double or more in next year or two. And I think we're in agreement on that point that, yeah, I think Micron stock it's almost a given at this point. If they continue to report higher revenue and new records for net income, the stock is just going to follow suit, regardless of what the valuation is. And so that's ultimately, I think, a good thing to point out. And despite the valuation concerns I personally might have that led us to exit our personal position in Micron late last year and swap it out for some other stocks instead, that's not what most investors are looking for. But let's maybe delve into a little bit more detail on this. If you look a little bit further down, we have CapEx numbers plugged in here. We have CapEx at about 32% of revenue for this current year, which gets us to about $8 billion in spending. And then if we just hold that number steady for fiscal year 2025, based on the revenue increase, CapEx actually increases 50% year over year to $12 billion. I didn't completely make that up. In fact, I might have made that a little bit conservative. And this maybe goes back to another reason I have for being cautious on Micron stock. This is Micron management's outlook for CapEx spending this year and then fiscal year 2025. Walk us through this, Kasey.
So for the next year, fiscal year 2025, Micron says that their CapEx will be around the mid 30% range of revenue for next year. Currently, Micron is in construction of one fab in the United States in Idaho, and they're working through the permitting process of a second fab in New York. The Idaho fab is not expected to create any meaningful supply until fiscal year 2027. The New York fab, not until 2028 or later. In our last video, we did an update on wafer fab equipment companies. And all of those businesses like Lam Research, ASML, Applied Materials, Tokyo Electron, KLA Corp, the Fab Five supplying equipment to companies like Micron, who are purchasing wafer fab equipment and packaging equipment to fill up these new fabs.
And with many of these new fabs currently under construction, many of them not expected to open until 2.5, 3 years, maybe even longer than that, we have a long tail of elevated CapEx from companies like Micron that will benefit companies like Lam Research. And because we don't know exactly what significant record revenue looks like for fiscal year 2025 for Micron, we don't know exactly where this is going to wind up for the Fab Five companies, for the actual equipment makers. But what we do know is, regardless of what the ultimate record revenue looks like for Micron, because they said mid 30% range is their guidance for CapEx spending, with most of that getting spent on new equipment, companies like Lam Research, that means we're also looking at far and away new record revenues for the Fab Five. This is highly relevant, especially for Lam Research, because historically, the majority of their revenue actually comes from the memory chip manufacturing market. Of course, that's dipped to below 50% during this nasty downturn the last 2 years, but that is expected to pick up in grand fashion starting the second half of 2024. Check out that last video that we did where we explain the dynamic a bit more in detail for a company like Lam. And in particular, when it comes to this company and its relationship with Micron, as they start filling up the Idaho fab and later on the New York fab with equipment, the percentage of revenue coming from US customers is probably going to jump much higher than it has been in recent quarters.
Let's give our concluding thoughts here, Nick, on Micron and the memory market in general. I think Micron stock is a high valuation, but I really do think that ultimately it will continue to rise higher because of very aggressively positive guidance. I think last year, Nick, that we discussed slowly exiting our Micron position. Nick, what are your thoughts on it now, especially with this run up in stock price?
Well, with the assumption that the stock price is probably going to continue going higher from here, I think we're more than happy to still have an economic interest in Micron's ultimate success. The reason for wanting to swap Micron out, a stock that we had owned for a number of years prior, was we were looking for business models with a bit more durability because at some point, as all of those new fab construction projects wind down, at some point in the not too distant future, let's say within the next 5 to 6 years, sometime before 2030, we do think that the semiconductor industry is probably going to have an excess manufacturing capacity crisis on its hands. Basically, way too much global semiconductor manufacturing facilities were built for ultimate demand. So we're looking for businesses that aren't going to get hit as badly by an ultimate down cycle. Micron, again, as you can see from the chart that we showed in the last decade's performance, when there are downturns, this company can experience some significant decreases in revenue and periods where they report, if not steep GAAP net losses, close to zero net income. By contrast, as we've been talking about since we started this channel in the fourth quarter of 2022, the Fab Five, ASML, Applied Materials, Lam Research, Tokyo Electron, and KLA Core are profitable in all counts, or at least historically have been for a long time, profitable on all counts of the cycle. We also have added to some promising small cap fab equipment names in the last year and a half onto Innovation, Axcelis, and Air Test Systems, which is hoping to get some new use cases in the memory market for test and burn-in equipment. And again, Kasey, your top pick, one of your top picks for 2024, Pure Storage, all in on SSD and software.
All right, everyone. I'd like to remind you to hit the subscribe button, have notifications enabled, and check out our Semiconductor Insider membership, just $5 a month. Gets you access to all of our video notes, Discord channel, and live Q&As on a monthly basis over there on Discord. We will see you all again very soon here at Chipstock Investor.